Hey guys, I'm here at Walgreens. I'm doing some little errand pickups, and since I'm here, I was thinking let's do a video. So we're gonna do a 5-minute stock analysis on Walgreens to determine if Walgreens is a buy, hold, or sell. Coming right now. Okay, here's your 5-minute stock analysis on Walgreens Boots Alliance. Could be found on the New York Stock Exchange as WBA. Walgreens is an American company that operates as the second largest pharmacy store chain in the United States behind CVS Health. It specializes in filling prescription, health, wellness products, health information, and photo services. As of August 31st, 2018, the company operated 9,560 stores in all 50 states, District of Columbia, Puerto Rico, and the U.S. Virgin Islands. It was founded in Chicago in 1901, and the Walgreens headquarters office is in Chicago suburb of Deerfield, Illinois. In 2014, the company agreed to purchase the remaining 55% shares of Switzerland-based Alliance Boots, which is the reason why they call now Walgreens Boots Alliance, to create a global business. Under the terms of the purchase, the two companies merged to form a new holding company, Walgreens Boots Alliance, on December 31st, 2014. Walgreens became a subsidiary of the new company, which retains its Deerfield headquarters and trades on the New York and NASDAQ under the symbol WBA. Let's look at some of the fundamentals of Walgreens. Revenue grew at a compound rate of 8.46 from 2009 to 2018, and net income grew at a little higher rate at 10.74% from that same time period. They currently have a credit rating of BBB, which is investment grade, and their earnings growth versus last year's grew 33.60%, which is outstanding. However, their 5-year earnings growth came in at 14.55%, which is still outstanding, and the net income at a higher rate versus the 10-year compound rate of 15.45%. For last year, adjusted earnings came in at $6.02. They have a net margin of 3.82, so this industry has thin margins. However, the margin did grow versus last year, which last year came in at 3.45. Debt to cap at 29%. They currently have a nice dividend yield of 3.71% and a very low payout at 29.5%. They've been growing the dividends at a super long time for 43 years. Basically older than I've been alive. They've been growing dividends. And they have a 5-year dividend growth rate of 7.32. However, the most recent increase came in at only 4%, 3.98%. The good news is that their 5-year dividend yield average is at 1.9. So you could get the company at almost 200 basis point higher than what its 5-year average. However, the Chowder rule gives us a 10.9, which is lower. I like to see it at a 12 or higher. But since the dividend payout is super low and the yield is a nice, decent yield, I'll give it to them that they have a Chowder rule of basically 11. Let's look at the future, what analysts expect. So in 2019, they expect a earnings of 5.98, which is a few cents lower than 2018. And in 2020, they expect a little growth of $6. And the 3-year projected earning growth came in at 6% from CFRA. Forward PE of 8.5 versus the current PE of 8.2. I actually like to see this current PE to be higher than the forward PE. So this tells us that earnings are expected to be lower than they are the previous year. However, the 5-year PE average comes in at 22.9. So even though earnings is expected to be a little less than the previous year, the price is so low that the current PE is great versus their 5-year PE average. Let's look at the fast graphs. We have here the black line represents the monthly closing price, blue line normal PE, and the orange the average 15 PE earnings. As you can see here, the black line is way below the normal PE and the earnings. So that based on this graph, it looks like the company is undervalued. So let's see how undervalued it is. So CFRA has a value price of 66.38, Morningstar 68, Simply Wally at 112, which is quite high in my estimates, and Fast Graphs at 89, Yahoo at 57, and my dividend discount model analysis at $40.57. Averaging out the six fair value prices, we get a $72.35, which compares favorably to the current price of $49.32. So basically the company is undervalued by 46.7% at today's price. With that, I recommend it as a buy. I actually hold Walgreens in my portfolio, and I do plan to buy more shares at this price range. As you can see, is super undervalued. They have a nice dividend yield, and the payout is super low. So those are the things I like about the company. They are closing some stores, which basically the different stores are cannibalizing each other. So they're closing out, stores that are not producing. Yeah. So with that, I think Walgreens is a buy. If you have a company that you would like for me to see to do next, please leave a comment below. Thank you for watching. If you find this video informative, please hit the like button and subscribe to my channel. Also, you can check out my portfolio link in the description below. And don't forget to take a look at my website, fiscalvoice.com. Thanks, guys.